There's also this element, this tax element of Jeffrey Epstein registering his businesses in the U.S. Virgin Islands. Talk to us about how that played a role in his ability to grow his wealth.
Right. So Epstein became a resident of the U.S. Virgin Islands in 1996, and he becomes a resident in 1996. 2 years later, in 1998, he purchases Little St. James Island, which has come to be known since then as Pedophile Island for the alleged sex crimes that took place there, that Epstein allegedly committed there. And in 1998, the same year, he sets up a company called Financial Trust Company. But then he sets this up in 1998, and he applies for a program called the Economic Development Commission (EDC) program in the USVI. And basically, it offers exemptions of 90% on corporate income tax and 100% on excise and gross taxes to businesses that fulfill a set of requirements. We know from the records, both that the New York Times obtained and also from court records in the lawsuit between the U.S. Virgin Islands government and J.P. Morgan Chase, that Epstein obtained those benefits. And what we know is that he obtained about $300 million in tax benefits over that time. That's sort of an official calculation from the U.S. Virgin Islands government. And we also know that he only paid about $41 million in that period, 1999 to 2018. So, if you crunch the numbers, it comes out to, about a 4% tax rate, when throughout most of that period through 2018, the U.S. Virgin Islands was charging a, top corporate income tax rate of 38.5%. So these were tremendous tax benefits that he was gaining.